Did you know a housing market can crash as fast as it rises? That's right, and today we're uncovering the 10 crucial signs that the housing bubble is about to burst. Whether you're buying your first home, investing in property, or just curious about the market, this video is packed with insights you won't want to miss. Understanding these signs can be the difference between making a savvy decision or facing a financial nightmare. So why should you stay till the end? Because knowledge is power, and in the world of real estate, it's your best tool for navigating the market's highs and lows. Before diving into the telltale signs that the housing bubble is about to pop, you first need to understand what a housing bubble is. Think of a bubble as a balloon. You keep pumping air into it and it gets bigger and bigger. But there's a catch. The balloon's skin starts to stretch too thin and can't take anymore. Eventually, pop. That's exactly what happens with a housing bubble. Prices shoot up really quickly, but not because people are getting paid more or because more folks want to buy homes. It's all because of guesswork, too much excitement, and risky moves. Then when prices hit the roof and can't keep up, they tumble down just as fast. Back in the day, specifically around 2008 to 2009, the US had a massive party with this housing balloon, and boy, did it pop big time. It wasn't just a loud noise, it shook the entire economy and left a lot of people picking up the pieces of their shattered piggy banks. Houses weren't worth what people paid anymore, and many lost their homes. Housing bubbles aren't something new if you take a peek back through history, but when they burst, boy do they make a mess. And with how connected the world is today, that mess spreads far and wide. Take the 2007-2008 mess in the US, for example. People were grabbing mortgages like they were going out of style, buying houses not to live in, but because they thought they'd make a quick buck as prices shot up. But then, bam! The bubble burst, and it wasn't just a small pop. Foreclosures went through the roof, banks went belly up, and it wasn't just a US problem. The whole world felt the shockwaves. But let's not forget, the US isn't the only one who's played this risky game. Spain in the early 2010s, Japan in the 1990s, and even going way back to the Netherlands in the 17th century with their tulip mania, all show us how crazy things can get when speculation and excitement take over common sense. All these bubbles have a few things in common. Prices climbing way too fast, everyone being way too optimistic, ignoring the real economic signs, and then facing the music when things go back to reality. Knowing what a housing bubble looks like and spotting the warning signs is super important. Whether you're thinking of buying a house, investing in property, or just want to understand what's going on, these insights can help you steer clear of trouble. We're about to dive into those warning signs so you can better navigate the twisty world of housing markets. And remember, while no one's saying a crash is happening tomorrow, knowing these signs helps you stay prepared and make smarter choices. Please take 2 seconds to help me out and hit the like and subscribe if you're enjoying the video so far. Each like and subscribe helps support this channel and keeps us motivated to keep making you great content. Thank you. Now, back to what I was saying. Have you ever wondered why some houses suddenly cost as much as a luxury yacht? Let's find out. Compare your height now to when you were 10. If there's a huge jump, that's expected. But if house prices shoot up way faster than they usually do over the years, that's like suddenly growing a foot overnight as an adult. Something's up. This sudden leap in prices, way beyond what's normal, can be a big warning bell for a housing bubble. If houses in your area are starting to feel as unreachable as a luxury yacht, meaning their prices are way out of sync with what people actually earn, it's a sign. Houses should be something people can realistically aim for on their local salaries. If not, it's likely not just demand driving up those prices, but something more speculative and risky. Is it still smarter to buy than rent? You might rethink your strategy after this. Think of this like deciding between buying a car or sticking with public transportation. There's a tipping point where one makes more sense than the other financially. In housing, when buying becomes way pricier compared to renting, we're talking big gaps. It's a clue that owning a home is becoming a dream rather than a smart choice for more people. This high ratio could mean the market is getting too hot, and not in a good way. Also consider the inverse. If rents are higher than the cost of owning a home in your local market, That would be a clue as to being a good time to buy. Imagine your family's spending on video games started to take up half your total budget. That would be a bit worrying, right? Similarly, if a country's spending on mortgages starts taking up a bigger slice of its economic pie, it's a sign that housing is perhaps getting more attention and debt than it should, which can be risky. When people start borrowing money like they're on a shopping spree, but for houses, it's a red flag. If folks are getting loans way bigger than what their paychecks can handle, it means the market might be running on borrowed time and money, setting the scene for potential trouble if things go south economically or interest rates jump up. Recognizing these signs early can help navigate through the tricky terrain of housing markets without getting caught up in a bubble burst. How easy is too easy when getting a loan? Next up, the answer might surprise you. When it suddenly becomes super easy to get a loan, even for those with shaky credit histories, red flags should go up. This trend could mean trouble ahead, as more people might default on their loans if they hit financial bumps. And then there are those tricky mortgage dealers that sound great at first with low rates or small down payments, but can turn into a nightmare when rates spike or terms change, catching homeowners off guard. The belief that house prices will always go up no matter what is a classic sign of a bubble. This kind of endless optimism can push prices to levels that just don't make sense. It's risky to think this time is different and ignore the lessons from past market crashes. Markets can and do fall, and thinking it won't happen this time is a gamble. Can flipping houses quickly turn from a dream to a nightmare? Let's dig deeper into this. When more and more people buy houses with the plan to sell them quickly for a profit, rather than living in them or renting them out long term, it's a sign the market might be overheating. Viewing houses more as quick cash machines rather than homes or long-term investments can lead to instability, making the market vulnerable to sharp downturns. If there is a sudden increase in homes for sale or rent that no one's moving into, it's a clear sign there's too much supply and not enough demand. This imbalance can signal a market heading towards a downturn. Similarly, if construction projects are ramping up way faster than people are looking to buy, it can flood the market with too many options, pushing prices down. Interest rates are climbing, but what does that really mean for your wallet and your future in the housing market? The impact might be bigger than you expect. Picture this: you're already stretching your budget to make your mortgage payments, and then bam! Interest rates go up. Suddenly, you're paying way more each month. That's a classic sign things are getting tight. Central banks crank up these rates to cool down super hot economies or beat down inflation. But guess what? This move can also accidentally pop the housing bubble, especially if everyone's hooked on cheap loans to afford their homes. Have you ever seen a frenzy at a sale where everyone's grabbing stuff before it disappears? That's what happens in the housing market too. Houses sell like hotcakes, and buyers get into crazy bidding wars, pushing prices sky high. It feels like a race to grab a piece of the action before it's all gone. If you're seeing this, it might be time to hit the brakes and think carefully. And now, the moment you've been waiting for, the number one sign. Are you ready for it? Sometimes the biggest sign is that there are no signs, at least no obvious ones. The market seems calm, but that doesn't mean it's safe to dive in without looking. Staying cautious is key. Keep on searching for that perfect home, but keep your eyes peeled for these subtle hints that things might not be as calm as they seem. Have you ever thought about what happens after the bubble bursts? It's not just a pop and done. The aftermath sends shockwaves that touch everything and everyone. Here's what happens. The house prices start to take a nosedive. Imagine this: houses that were once climbing in value by big jumps suddenly fall off a cliff. It's a sharp drop that can catch a lot of homeowners off guard, especially those who jumped in when prices were sky high, thinking they'd only go higher. Now their investment is worth a whole lot less, and that's a tough pill to swallow. Then there's the tricky situation of underwater mortgages. This is when you owe the bank more money than what your house is now worth. It's like being in a financial hole that just got deeper because of the market crash. For many, this means being stuck with a property they can't sell without losing money. It's more than just a money problem. It's stressful and can make people feel pretty stuck and hopeless. Why do foreclosures skyrocket, and how does this affect your neighborhood? Stay with us to understand the real impact of rising foreclosures. When a housing bubble bursts, home values decline sharply. Now, add to that a mortgage that's suddenly more expensive because the interest rate decided to climb. It's a perfect storm. As more people can't pay their loans, banks start taking back homes. This leads to a lot of foreclosed houses popping up for sale at bargain basement prices. While that might sound like a deal, it actually makes things worse for the housing market, pulling down property values even more. And in areas where foreclosures become common, the whole neighborhood feels the pinch. The value of all the houses around, not just the foreclosed ones, starts to drop. So foreclosures have the potential to take down whole communities, making recovery from a burst bubble even tougher. How does a housing crash hit banks and your own pocket? Let's explore the chain reaction that can tighten your budget. Banks and places that lend money get really hit hard. They put out a lot of their chips into housing, and when those bets don't pay off, they lose big. This means they get stingy with their money, making it tougher for folks to borrow for things like starting a business or buying a car. Sometimes it gets so bad that some banks might even be at risk of shutting down unless the government steps in to save the day, kind of like what we saw in the big financial mess of 2007-2008. Now, think about how most people see their homes as their biggest treasure chest. When prices fall from the sky, it's like someone just stole their treasure. Suddenly, people feel a lot less rich and way more cautious about spending. This means they stop buying stuff they don't absolutely need, which sounds wise, but when everyone does it, businesses everywhere start feeling the pinch. This all adds up to what we call a recession. It's a time when the economy is moving as slow as molasses. Companies see fewer customers, so they might stop hiring or even let go of some of their workers. And it's not just a few places that feel the chill, it spreads out far and wide, showing how everything in our economy is linked together like a giant puzzle. And let's not forget the human side of things. The stress and uncertainty of a housing market crash can take a serious toll on people's mental health. Homeowners might feel the pressure of losing their life's biggest investment, while renters might face instability if landlords decide to sell or change up rental agreements. So what can you do to brace yourself if you're worried about a housing bubble bursting? First off, educate yourself on the market and your own financial health. If you're looking to buy, think about whether you're ready to ride out potential storms. And for homeowners, it might be a good time to reassess your mortgage and savings to ensure you're as secure as possible. By staying informed about the housing market and broader economic indicators, you can make more informed decisions whether you're buying, selling, or just trying to understand what's happening. In navigating the unpredictable waves of the housing market, a critical strategy is avoiding over-leveraging. Next up, let us take a closer look at why and how. When we're riding the waves of the housing market, there's one thing you really got to watch out for, which is drowning in too much debt. Let's dive into why biting off too high of a mortgage than you can chew can end up being a real nightmare. First off, borrowing money is pretty much a given when you're eyeing that dream house. But here's the deal. Getting in over your head with a huge loan can tie you down with some serious financial weight. You need to think about what those interest rates and monthly payments mean for you, especially if the rates decide to climb up tomorrow. Borrow smart. Make sure you can still handle the payments, even if life throws you a curveball. Now, on to turning your home into a personal ATM. It's tempting, right? Property values go up and it feels like you've hit a jackpot. Refinancing to pull out cash might seem like a sweet deal, but hit the brakes for a second. Doing that means you're digging into the equity you've built up, which is like erasing your financial safety net. And if the market decides to take a nosedive, you could end up owing more than your home's worth. Ouch. So, the game plan? Stay sharp and don't let easy money lead you into a debt dungeon. That way, you're all set to navigate through the housing market's highs and lows without getting knocked off your board. As we've seen, the signs of a housing bubble about to pop can be quite telling if you know what to look for. But beyond the signs, it's important to understand the far-reaching effects such a crash can have, not just on the economy, but on society, communities, and individuals' lives. Remember, being prepared and informed is your best defense in an ever-changing world. Thanks for watching, and please make sure you subscribe if you enjoyed the video, and watch this one as well.